Evening, everyone. I see Amita Vissa, the moderator of today's webinar, and it's my privilege to serve as the moderator of today's webinar. On behalf of Committee of Commercial Law, Economic Advisory and NPO Committee, that is CC, LEA, and NPO of I extend a warm welcome to all of you. We are delighted to host this insightful session of professional opportunities under FEMA scheduled today, that is 6th November from 2 p.m. to 4 p.m. This webinar is a part of our ongoing efforts to empower chartered accountants with knowledge and opportunities in emerging domain. Before we begin, allow me to briefly introduce CC, LEA, and NPO Committee of ICAI. This committee is dedicated to enabling chartered accountants to contribute meaningfully to strategy and policy that unlocks economic, financial, and social values. It blends analytical foresight with commercial acumen to support the profession's evolving role. Our key focus areas include policy analysis and technical guidance, knowledge dissemination and regulatory input, creating awareness of professional avenues in commercial law, economic advisories, and NPO cooperatives. Now it's my pleasure to introduce our eminent speaker, C. Naman Srimal, is FCA, DISA, FCCA UK, ADIT UK. Very learned speaker we have with us today. C. Naman Srimal is Distinguished Chartered Accountant and Head of Cross-Border Transactions at Ten Srimal and Company, Jaipur. With over a decade of experience, he specializes in management consultancy, transfer pricing, international taxation, inbound and outbound investment strategies. He has authored insightful articles for leading publications and has been a speaker at prestigious forums including ICI, BCAS, and CTC. Cinnamon also served on several influential committees like ICA Direct Tax Committee, BCA's International Taxation and Technology Committees, Rajasthan State Development Councils of Assam. We look forward to an enriching session and hope it provides valuable takeaways of all participants. Over to you, Naman sir.
Thank you, Amita ma'am. Thank you for your warm introduction. Thank you, ICA and the committee of CCLEA and NPO committee to give me this opportunity to to speak on the topic which is very, very close to my heart is professional opportunities in FEMA. There are, as people know, a lot of professional opportunities, and it's very amazing to see that ICI is spreading awareness about it, and especially this committee. I see a lot, many posters come, and many sessions are being organized for various laws, which some people, the FEMA is still a law which a lot of people must have heard of, but other laws which people do not have an idea about, and so they can enhance their niche, enhance their work. So I'm really thankful to this committee and ICI to help the members achieve various new ways to start new areas of practice, niche areas of practice. I'll just share my screen and then we'll go ahead. Let me know my screen is visible. Okay, great. So when the topic was given to me, professional opportunities in FEMA, I thought how to address this. I have spoken on this topic, but I thought that opportunities will only come when we understand the law. We understand where it will create some kind of issues. We understand what's the formalities required in this act. And therefore, when I say professional opportunities in FEMA, it does not mean that, okay, these are the forms to be filed. These are, you can go to the client and ask them this form to be filed and maybe increase your professional income. No, what I'm trying to see is And what in next 2 hours we'll try to cover, though FEMA is a very, very huge law, you required weeks and weeks of sessions. We'll try to cover what are the basic restrictions in FEMA any businessman or any individual will face. And when he or she will face, they will come to you. When they will come to you, sometimes they are not even aware of those restrictions. So you need to understand this restriction and then tell them that, okay, these things can be done in this manner. For this form should be filed. For this something, you need to get done. So the idea, the professional opportunities never come like somebody will come and ask you to file the form. Professional opportunities mostly come when somebody will say, okay, I want to incorporate a company outside India. I have done this, UAE, this I've gone and done this. And you say, no, stop here. You need to follow A, B, C, D, these many things. So the idea is to give you a fair view of FEMA, how it is read, what are the important ways where you will see a lot of traction, and how to capitalize on that, how to help your clients, serve your clients, and therefore create professional opportunities. So that's the whole idea what we are trying to do today. What are the topics in that government? What is FEMA? What's the evolution like? What are capital? What is ODI and FDI? So these are the two various things, ODI and what are late submission fees? What are compounding? That is what we are trying to cover through various through this journey today. So what is FEMA? FEMA is fundamentally a policy law. Okay. And you will be surprised to know that there are only few countries in this world which will have a foreign exchange law. Either they do not allow it, or they allow it completely free. The kind of complex FEMA law, the foreign exchange laws we have, is a rarity in the world. And we allow it also, but we want to control it also. We want to control it sometimes, but next day we said we don't want to control it. One day we say want to control it, but don't control it, and next day we say no, these things need to be there. So it's a policy law, it's a framework, it's a policy of the current government, and every government will have its own way of thinking. If they think too much money is flowing outside, they would try to curb it. If they feel no, we are comfortable, they will try to uh, ease it. So it's the policy law, and no one can go against the policy. Okay, so it's a legislation to regulate foreign exchange transaction. The objectives are to regulate foreign exchange transaction, to facilitate and promote external trade and smoothen cross-border transaction, to manage the foreign currency reserves, and that is very important. Sometimes you question why this restriction, why so much? Because we have been historically foreign exchange deprived country, and therefore we want to manage that effectively. To encourage foreign investment, they want to open conditions into foreign conditions also. So basically, the idea is to govern and manage the flow of foreign exchange. That is FEMA. Remember, foreign currency is the property of the country. And I always give this example when I start with the FEMA session. Always imagine foreign currency likes the when you go into the casino, you get a chip. Okay, so you play with those chips. Those chips are the property of the casino. So even the foreign exchange is the property of the whose property it is? It is the property of casino, and therefore they have all the rules, all the methods available to control its flow. How much you can take, how much you cannot take, how can you take out, how much you can cash out, how much you cannot cash out, how much you can play on each table. And when you play on each table, whom do you play with? You play with the dealer. Similarly, in the foreign exchange context, everything is done through an authorized dealer bank. Okay, so authorized dealer banks are an important spock in the wheel while they understand who we are you playing with. So all your transaction needs to be done with the authorized dealer. They will guide you which rule is correct, which rule is not correct, and therefore it sometimes becomes very difficult. So at higher level, a law and rule is formed. Then you go down. Every AD banker may have been given some liberty, and they interpret the rules in a different manner, and that is how in one place, it is different from casino. Because in casino, every dealer follows the same rule. But over here, each dealer can, practically speaking, follow a different rule altogether. They have been given a very, very wide ambit to follow, and more powers are given to authorized dealer. And therefore, the term we generally sometimes use is sometimes AD shopping is there, that whichever is giving us the favorable treatment, we will move out. But that is something on a practical side. The FEMA basically regulates the foreign exchange law, that foreign exchange. We'll go. What's the history of FEMA? All of us know that 1939 foreign exchange control was under Defense of India rules. Then 1947 FERA was introduced, very, very restrictive. FERA 1973 again, even if you're holding this currency, that currency, we will currency deprived. 1991 was the lowest part of it, and then we started uh, recovering. So 1999 FEMA 99 came, and when FEMA 99 came, it created an environment of trust. It created an environment of kind of how that okay, till this level it's allowed, it's completely allowed. For the next level, now you need to go ahead. So that is what FEMA is. That's what the history of FEMA. The most important thing whenever you practice FEMA is to learn how to read FEMA. And many people get confused. Till now, after 15 years of experience, I somehow face difficulty of how to read FEMA. But one thing I'm very sure of how not to read FEMA is doing by Google search. Take with me, guys. Just coming a question, you do a Google search, you do a chat GPT search. FEMA law cannot be learned through a Google search because laws changes, policy changes, Google is not updated. Even sometimes master direction, master circulars are not updated. And if master directions are not updated, and if you're seeing just there, you will not be able to understand FEMA, not at all. And therefore, my tip number one was foreign exchange is not your property, it's India government. Remember that any rule and law you understand. Tip number two would be do not learn FEMA while doing Google search or chat GPT search. They more often than not mail can lead to some old circular, some old which has been already been repealed, and you will see that part of master circular, but that has not been repealed in the master circular. So a lot many changes will be there. That's not the way to read FEMA. Now, how to read it? Let's just we have cut one way how not to read it. Now, how to read it? Obviously, the first thing is Central Act. One of the tiniest act you will see is the FEMA Act. Okay, Central Act. So it's a central statute of parliament. Only 49 sections, and that too, most of the sections you will have to read till 10, 15 sections. Then it's more on an operative nature. It applies to whole of India, even to office, branch, or agency abroad, which is owned or controlled by person resident in India. Finance Act 2015 amended FEMA 99 as follows. Capital flows equity, it was by central government. It took central government charge of it, and the debt flow by RBI. So in both the cases, pricing, reporting, and valuation regulations are prescribed by RBI. So first of all, whenever you read FEMA, always see the Central Act first. How it is allowing something, how it is not allowing something. Always, whenever a FEMA query comes, do not jump to Google. Always go to Central Act. Then who has the rules? The power to frame rules under FEMA is exercised by Department of Economic Affairs, MOF, under central government. The power to, just a second. The power to frame rules is governed by Department of Economic Affairs, Ministry of Finance under CG. The power to make law regarding control of equity flows have been shifted, as I've already said. So then you comes with the rules. First, you see whether it is allowed, not allowed, whatever is the rules prescribed under the Central Act. Then you go to the rules. Then come the regulation. The regulation is always denoted by in the bracket R, capital R. So Act, rules, regulation. And the RBI notifies various regulations on the foreign exchange transaction. Whenever the new regulation, as I said, it comes with a R as a along with the year of obligation. So you will see R 2025. That's the regulation which is there. So you go to Central Act, then you go to rules, then you go to regulation. Then come directions circular. So whatever has been the direction given by from the time RBI issues APDIR circulars, APDIR series circulars, okay, directions to various authorized persons. These authorized persons, these direction lay down that how the business is to be conducted by authorized dealers, the authorized person, how they would contain it, how they would see it. Then come the master directions. So it all is taught, the directions and those have been is been consolidated. Then you come to master circular, which is there. Consolidated all the existing APDI circular. Okay. Now they are not much relevant because master directions are there. Then come the FAQ sometimes, like for LRS, you have FAQs. For various aspects, you have various FAQs. Then come the press release. So sometimes you will find some allowance in press release, but in the directions it clearly says not allowed. Please do with the directions and not with FAQ, not the press release, not with the FAQs. Sometimes we just do a search, find an FAQ, get an answer. No, always follow Act, rules, regulation, directions, master direction, master circular, FAQs, and then rules. Press release, sorry. Act, rules, again I'm stressing it up, act, rules, regulations, directions, master directions, master circular, FAQ, press release. To find an answer in FEMA is easy. Where to find is tough. You will get an answer. But whether it is correct, whether it is updated or not, you would believe that okay, master circular is updated of 2018, and RBI would be updating it if it are updated. So let us take data from them. No, master circular might not have been updated. There could have been some policy changes, some circular directions given by the RBI, and it is still not updated in master's directions. So you need to see the directions and not the master direction. In case of conflict, always see the upward path. And therefore there could be a lot many. FEMA is not a well drafted law, and because every time new notifications come, it creates a kind of an hassle. In case of doubt, follow whatever is more likely to be regulated and controlled. Okay, follow that. So that is how you read FEMA. There is no, two-way communication over here, and that is I was stressing upon that point. In case any issues, I'm not sure whether there is a Q&A box or a chat box. If it is there, do ping. Then only I'll come to know whether we are going in a right direction or not. But meanwhile, I will keep on, going on. What are some of the important sections? Okay, of FEMA Act 1999. You need to remember. And as I said, in the casino, the property is of the casino. The chips are of the casino and not yours. So it says Section 3, very, very important. Save as otherwise provided in the Act, rules, or regulation made thereunder, or with the general or special permission of RBI, no person shall deal in or transfer any foreign exchange or foreign security to any person not being an authorized person, make any payment to or for credit of any person resident outside India in any manner, receive otherwise through an authorized person any payment by order or on behalf of any person resident outside India in any manner, enter into any financial transaction in India as consideration for or in association with acquisition or creation or transfer of a right to acquire any asset outside India by a person. So this is a blanket no, that you cannot do this transaction. So it starts with a blanket no. Now you need to find out the carve outs where it is saying yes. So there is a carve out in a capital account transaction. So, subject to provision of subsection 2, any person may sell or draw foreign exchange to or from an authorized person for a capital account transaction. It says like this: the Reserve Bank in consultation may specify these classes, this is this. that how it will, and we will go one by one, you know, how how they can stop. So there is a capital account transaction, there is a current account transaction. We will get to it in a while. What's the difference in the accounting terms, what we understand capital account transaction and current account transaction, and what is the difference over here. So save this definition for a while. Very important is person resident in India, PRI. It is not with respect to their citizenship. It is not with respect to their tax mm, residency. It has a separate law of its own. And what does the law say? Someone who has spent more than 182 days in India, someone who has spent more than 182 days in India during the previous financial year, someone who has spent, there is no exceptions. Okay, 182 days gone, with exception. A person is considered a non-resident if they taking up employment outside India, if you want to take up an employment outside India, or carrying on outside business or a vocation outside India, leave India to work abroad, or for any other reason indicating their intent to stay outside India for an uncertain period. So FEMA again is a policy law. Okay, and FEMA says that if you intend to move out, the intention is there. The intent to move out is for good. That very day, the moment you move out, you become a non-resident, because now you're not under the control of the Indian shores. The moment you move out of the casino, you are outside the casino. Okay. And you have not purchased the ticket. Now you do not have an intention to come back. You do not use those chips outside. You cannot go outside and use the chips to buy chai. Okay. You cannot use the casino chips to buy chai. Okay. Nobody will buy that. So a person is considered a non-resident if they taking on employment outside India, or carrying out or outside India business vocation, leave India to work abroad, or for any other reason that they do not intend. So, a friend of yours, a businessman who wants to leave India because a lot of their friends are leaving and settling in UAE. The moment their intention, they got a visa, they got a work visa, they got a property over there, they're intending to lease out the property over there, something, or for the business employment, they become a non-resident. Okay. A person is considered resident if they come to stay in India or for employment business, or they stay in India for an uncertain period. A similar thing. You enter into a casino, you do not know when you will venture out. Casino will not let you go out. They want you to play and play, play. You become a resident of that casino. Okay. So you considered resident as soon as you come in. Now the question always, and recent Safema judgment was also there, it says that a person who spent more than 182 days, is this a prior condition? Everyone has a different understanding of it. Everyone wants to use it in a different manner. I would say the moment this is a exception out of it, you do not need to see 182 days whether somebody is coming in, they become a resident. Similarly, when somebody is moving out, 182 days is irrelevant. And remember, 182 days is with respect to previous financial year and not this financial year. So it's just taken it's an indicator. If you are there more than 182 days in the previous financial year, you are a resident unless you fall in this exception. So very, very important. Any person or business registered and incorporated in India, any office, branch, or agency in India owned control, any office, branch, or agency outside India or owned or controlled by a resident, that also will be a person resident in India. Even if that business registered incorporated in India is actually run by a foreigner, that doesn't mean they would be a resident in India. Sometimes people ask that question. We incorporated a company in India. We are already foreigner. Directors, except one of them, are in Indian. Did the company be considered as non-resident? No. The company, once registered in India, is an Indian resident for FEMA purposes. Okay. So this is a very, very important discussion. And after the recent tribunal a lot of repercussion we would see, but I'm not going into this. The idea is to give you a wholesome, thing over here. Residential status, FEMA versus income tax. Uh, there is always a difference, and there could be a difference. See, income taxes with respect to year. In an year, from the Indian context, you be in taxable purpose. You may be a resident, you may not be a resident. Both things cannot coexist. Either you will be resident for full year, you will not be resident full year. For FEMA, you check preceding year, not that year. For FEMA, you check preceding year and not that year. And at specific point of time, you would be a resident or not a resident. In FEMA, intentions matters. In tax, stay matters. Okay, your stay is most important in FEMA. Your intention matters. Okay, that whether in that preceding year in what happens. So your in FEMA, your intention matters. In tax, your stay matters. Different residential status possible for the same year under FEMA and income tax, because the definition is different. It would yield to a different. So remember very, very clearly, always check preceding financial year or a specific, intention would. Always check preceding financial year for FEMA, for tax current financial year. In FEMA, intention matters, for tax stay matters, and both can be different. Income Tax Act, while giving a benefit of NRE account interest, mentions residentship as per FEMA and not as per income tax. So be aware of that also. And that is one difference you can bring to your client. You can tell them. Then there is another category in the PRI, person not resident in India, non-resident. Basically, non-resident, you have two categories or three categories: non-resident in India and OCI. Overseas citizen of India is that who is a person of Indian origin, spouse of Indian origin, and they get a special status, the OCI status, and they are a citizen of some other country, but they get an overseas citizen of India card. And an NRI is a citizen. Okay, they are a citizen, but resides out of the country. They are getting a little bit more leeway. Okay, so how it is divided? All individual. Let's just see this. All individuals. Sorry, not highlighted. All individuals will be divided either into Indian citizen or non-Indian citizen. Indian citizens would be a resident individual or an NRI. They are Indian citizen. For a non-Indian citizen, 2 point, all other citizens, an overseas citizen of India. NRI and OCI enjoy additional benefit. This is a very, very important slide. All individuals divided into Indian citizen or non-Indian citizen. Indian citizens further divide into resident individual and a non-resident individual. The resident people like you and me who are staying in India mostly. Then a non-Indian citizen will be divided into two: overseas citizen of India and all other citizens. So a resident individual need to keep all FEMA compliance aspect in mind, and NRI OCI would need to keep, or others also need to keep something which they are dealing in India. Okay. So one of the very important limb is to see who are an NRI, who is an NRI. The next limb is current account and capital account transaction. This is very, very important. Current account transaction is a transaction other than a capital account transaction. Remember one thing, okay? Capital account transaction, and this is again tip number 3 or a rule number 3. Capital account transaction are prohibited unless until allowed. Capital account transactions are prohibited unless until allowed. Current account transactions are allowed unless until specifically prohibited. This is the golden rule of FEMA. So current account, you can do everything until unless it comes into a specific set of restrictions, you can do everything. Capital account transactions you can only do when it is allowed, and therein come a major issue. Sometimes, for capital account transactions, there is nothing written. When there is nothing written, you cannot do it. And people come and ask that question, Sir, kuch likha hi nahi hai, nothing has been written. So we should do it, na? No. If it is nothing written, then please do not do it. So current account transaction is a transaction other than capital account transaction. Payment with respect to foreign trade, current business, interest on loan, remittance for living expenses, all those, permissible, all these immigration maintenance, this all. So, and remember, a current account transaction, I'll just give you first this brief. I think we need to jump it. Capital account transaction are the transactions which alters the asset or liability, including contingent liability outside India of person resident in India. So any person resident in India, if his asset and liability outside India gets altered, it's a capital account transaction. Or asset or liability of person or in India of person resident outside India gets affected, it's a what? It's a capital account transaction. So just to give you an example, you are receiving a loan. So for a person resident outside India, he is creating an asset in India. It's a capital account transaction. Again, you are giving a loan. Okay. Let's say you are giving a loan in your foreign currency designated account to someone. What will happen? So, let's say, see some questions. Gift from NRI by transfer from NRI account in India. NRI gifted NRI gifted a transfer from NRI account in India. What kind of transaction it would be? He has an NRI account in India. He provides a gift. He is gifted. His asset has reduced. A person resident outside India, PRI, NRI, whatever you consider, their asset has reduced. It alters the asset and liability. Its asset and reduced, and therefore it would be a capital account transaction. Change in asset in India of a person resident outside India. Now let's consider this gift from NRI by way of remittance from abroad. He took money from outside and just gifted. What do you think it will be? I may not get the answers, but you may think of the answers and try to map up whether it matches with yours or not. It will be a current account transaction. No change in asset. No, there is no change in their asset. It was an outside asset. They gifted. So any of your dollar, gifts you receive, your NRI gift, your friends gifts, that could be a current account transaction until unless prohibited. Bindas, it is allowed. Let's just see one more. Guarantee given by person resident outside India in favor of person resident in India. A guarantee has been given. Person resident outside India in favor of PRI. What transaction it will be? Let me give you this context. Capital account transactions are the transactions which alters the asset or liability, including contingent liability outside India of person resident in India, or asset or liability in India of person resident out of India. A PROI giving a guarantee in the of PRII. Interestingly, if you see the definition, I'll go switch back. Outside India of person resident or asset or liability in India of person resident out India. A person resident outside India, no contingent liability has been mentioned. Though he is creating a contingent liability by giving to guarantee, It's not mentioned over here. And therefore, it will be a current account transaction, does not change liability in India for person resident outside India. There is no change of the liability. Okay. But guarantee given by PRII in favor of PROI, guarantee given by PRII in favor of PROI, then it will be a capital account transaction. It changes the capital, it changes the contingent liability. And therefore, it is important. Why it is important to know? Whenever checking, first check whether this transaction is current account transaction or whether this check transaction or capital account transaction. It does not, if it does not alters the asset and liability of or contingent liability of a person resident in India, which is the outside asset liability or contingent liability, or for a person resident outside India, the asset or liability in India, it is a capital account transaction. If it does not alters that, then it is a current account transaction. I hope this fact is amply clear. This is the two things: NRI and capital account current account transaction are the base pillars, and that is why I thought I'll spend half an hour on it to create the base. Okay, let's go with some of the capital account transaction and what are we trying to see today. What I have covered more of OI and FDI because that is something day and day people will actually see. A lot many queries will come, and I have restricted myself for these two activities. Though there is export, import, and various, we will also cover that. But my major focus is towards OI and foreign investment related. So capital account transactions, it's not in two parts. What we're trying to cover is there overseas investment, foreign investment. Overseas direct investment, portfolio investment, direct investment, and portfolio investment, which is incoming. Overseas investment is outgoing, foreign investment is incoming. Now, coming to the professional opportunities, and I'll pause here for a while and I'll share the practical experiences. Many times it will happen that people will come to you and say you want to open a company in UAE, you want to come a company in US. It's daily people come and talk to about that because they want to grow. They see a market. They want to raise funds, so they see Singapore. They want to go into African regions, so they want to open a company over there. And in most of the places, company opening is very easy, fairly easy. You go over there, you swipe a credit card, you go and have lunch. In 2 hours, the company would be ready. Expedited fees. Immediately, the company would be ready. You go to Delaware, you pay expedited fees. In 2 hours, the company would be ready. You pay fees, everything is ready. So people would say, okay, I've gone there, I've swiped the card, I've made this company, is this fine? Do I need to show this in my foreign asset and everything? And you need to say, hold on, hold your horses. Okay, wait. This is not allowed as per Indian. But they say, oh, the Singapore person never told me, the UAE person, he was an Indian person, even had told me. It happens, believe me or not, friends, it happens more than 80% of the time we get such cases. That people have incorporated companies, people are sometimes running this for years and they were not aware. And is the biggest professional opportunity, I would say, we can take out in FEMA. Ask your clients, have you expanded outside? Have you done, see the ITR, if you're signing foreign asset, do we have some shares outside India? And in what category their shares would fall? Whether they will fall into a direct investment or a portfolio investment. Remember, the direct investment ones have good amount of regulations, good amount of form filing, and therefore this overseas direct investment and portfolio investment, whatever somebody has done, some kind of uh, investment outside India, it is that you check with currency, travel or regime overhaul, gave 3 years to clarify. The 3 years expired in 22nd August 2025, though I would believe that even if someone has done such kind of crime after 2022, they can still go, and 3 years is for them also. So it is better that
माइक तो बंद ही था मेरा शुरू से आवाज इसमें ले रही थी सेम है
uh, 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 you know you voice. So say that ask tell say make a ये issue हो जाएगा, you will have to pay penalty if you sell comes in. Yeah, video is hanged. Okay. Uh, sorry. Continue. Is this fine now? Okay, perfect. Thank you. Thank you for prompting. Thanks. So in the capital account transactions, okay, as I said, some people will come to you, they've already done this, or some people will come to you not knowing that so many things needs to be done. You need to tell them, okay, Form FC needs to be filed. Then every year an annual performance report will go to RBI, and many people out of that will not do such transaction. But better to file it up, better to tell them, and rather than creating a issue later on. So, you know, overseas investment. What is an overseas investment? Overseas investment can be done by a resident individual or an Indian entity who invest outside India, whether obtaining control or not of a foreign entity. This is an whole overseas investment by a resident individual or an Indian entity who invest outside India, whether obtaining control or not in a foreign entity is a overseas investment broad thing. Now, one part of it is overseas direct investment. What is overseas direct investment? Acquisition of any unlisted equity capital or subscription or as a part of memorandum or of association of a foreign entity. So acquisition of an unlisted equity capital or subscription as a part of memorandum association of foreign entity. So even if one paltry share you are having of a unlisted company, that is also overseas direct investment and subject to rigors of various form filing. You may have seen many Indian individuals doing private investment of $5,000, $2,000 through various apps and everything. Technically, they need to file Form FC if they're not done. You need to tell them that this is the repercussion. They need to file so many forms. They will end up not doing it. They want to wind it off and come back that money, bring back that money. Or invest instead of you buy 10% or more, so you can buy 10%, you would be in this trade of equity role wherein role of listed, say you 0.1% Apple by whatever, if you are, let's say, some Baba in India, less than 10%. Sorry, there was some net connection issue. Are you able to listen to me now? There was some net connection issue.
Yes, now it's visible also and can listen to you.
The network so that such issues do not arise. Just a second. Can you see the screen?
Yes, visible.
Yeah, thank you, thank you. So most of our clients would come into this space, acquisition of an unlisted equity subscription, or so even if 5%, 10% you are acquiring new entities, whatever way, you still will get into this space and you need to file form FC and you need to file various other annual forms if such things to be continued. So acquisition of any unlisted equity capital subscription. Okay. Is this clear? Let's go ahead. What are the prohibited sectors? Okay, what are the prohibited sector which is there? Unless otherwise provided in Act on rule, no person in India shall make ODI in foreign entity engage in prohibited sector, real estate activity, gambling in any form. So you cannot invest in a casino in in outside India. Dealing with financial product linked to Indian rupee without specific approval. So any kind of financial products. Remember that financial real estate activity, what it is. You may invest in a company having an immovable property. The expression real estate activity means buying and selling of real estate or trading in TDR. Buying and selling of real estate or trading in TDR, but does not include the development of township. So maybe let's say there is some listed entity and there is some entity outside you can who is development of township. You can actually invest in it. Construction of residential or commercial premises, road or bridges or selling or leasing, that's fine. But some entity which is just buying and selling of real estate, they don't want you to into trading of real estate, basically, or trading and transfer development, right? That is not allowed. Okay, that is not allowed. So you cannot do a ODI into it. Okay, what is an overseas profitable investment? Investment other than ODI in foreign securities, OPI. ODI is actually much more prohibitive, and OPI is easy to get done. Any unlisted debt instrument or any security who's not in IFSC, that's OPI by a person resident in India in the equity capital of listed entity, even after its delisting, shall be considered as OPI. So even if it is delisted, once you are doing a listed, if it delisted, it will be an OPI. We have some queries. An Indian company has incorporated a company in UK. However, the UK company does not require capital as of now. This is permitted under the local company law, local as such UK. Is this regarded in ODI? Is the Indian entity required to obtain UIN? Just have this question for a while. Okay. Indian company is operated in UK. However, the UK company does not require capital. So, yes, it will be regarded as ODI because the definition of ODI covers subscription. If a subscription of MOA had subscription does not make that payment is compulsory. You have subscribed even to the MOA. Also, this Indian regard will be required to intimate the AD before subscription to MOA and submit relevant form. This is again very, very important. People come to us, अच्छा ठीक है कंपनी बना लेते हैं फिर ये सब फॉर्म फाइलिंग कर देंगे. No, as of now, if you want to invest or subscribe in any of those entities outside India, you need to get that form ready, fill this up. The moment that company is approved, within 24 hours, your form should be filed. So better to connect the bankers first, tell them I am filing this form, this is the company name, please vet it. And if any changes, do let me know. So any kind of Indian company is incorporated outside, you better need to file this up beforehand rather than otherwise a late service fee of 7,500 plus certain interest, certain would be there. Now, a very important term is control in ODI. Okay. And a lot many people would come to you. Let's say I'm investing 1% in a startup, 0.1%. I may have to file a FC for it if I'm, let's say, investing one share into a private limited company. But if I do not have control over it, then I will not have to do the yearly compliance. So that's a relief. So what is the control? Control is the right to appoint majority of directors or to control the management and policy decision. It's the right to appoint majority of directors or to control the management or policy decision. This right is exercisable by a person or persons acting individually or in concerts, directly or directly, including by virtue of their shareholding or management right or shareholder agreement, that entitled them to 10% or more of the voting rights. In prior regulation, it was 20%, now it is 10%. So if it have more than 10%, right? And it's, remember, it's person and person acting individually or in concert. So group of people also joining together, they are into in together, they would also need to do it. Okay. So that is there. So a question, as I said, all five members, do they exercise control? I may have already given you the answers. So A, B, C, D, E, they are happening, and they would come to know. Okay, we are the five family members. We are coming together, and all us 10% and less. Do we need to still file APR and everything? The banks will generally take the call that yes, all these individual exercise joint control. As a definition of control includes a person or person acting individually or in concert, directly or indirectly. These exercise under joint control as well. There is the reporting to be done, and that's where the issue start arising. A lot of reporting is there, I would say, according to Rule 10, Regulation 10 of OA regulation. Any incomplete filing should be treated as non-submission, and therefore, we advise our clients and we advise the other chartered accountants that better get these forms vetted from the AD banker, because those are the people who would eventually, create any kind of issue. Any acquisitions of foreign security shall be duly reported in ODI or OBI is applicable. The reporting shall also be done as provided under the LRS, where such investment is directing toward LRS limit. Acquisition of foreign security by way of inheritance or gift shall not require reporting. So any kind of gift acquisition do not require reporting under LRS. So that is something important. Now, what is the reporting requirement? Okay. What is the reporting requirement per se is, just a second now. FC at the time of sending outward remittance or making a financial commitment, whichever is earlier in, you know. So even if you're making what is a financial commitment? A financial commitment is that you are actually subscribing to the memorandum. The day company is incorporated, your financial commitment is established. So remittance, seeking outward remittance, making the financial commitment as earlier. Then OPI you need to file in half yearly forms. Okay, within 60 days from end of half year, an investment is made. Disinvestment in section G in form FC. So some people have sold the stake. So within 90 days they need to get that money back, and within that getting of receipt of this money back, then within 30 days they need to file. Practically we have seen sometimes bank do not create that receipt of disinvestment proceed unless you file form FC, which is wrong, but they insist because they will say that once you receive the money, then we will be catching hold of you. So it becomes a little issue. Any kind of restructuring done in form FC, that is there within 30 days from the date of such restructuring. In case of OPI by acquisition of share of interest, the reporting is required by the office in India or branch. So all these activities, the reporting requirement is there. Further, this is the most important requirement, and this creating an issue is Form APR. Form APR is annual performance report, and I would urge all of you who have any such client who have done a foreign investment outside, go and ask their bankers to give you a project profile. Any unique identification number carries a project profile. In the project profile, they would mention that this is the APR. This is, this APR is pending by this point of time. Okay. And in this investment, such APR needs to be filed, such information needs to be filed. And you will see that since last 2, 3 years, because APR has mandated that foreign financials are to be signed in last 2, 3 years. A lot of companies are not able to file those APR and they want to get it done. It's creating an issue. So that APR needs to be filed. Again, a good professional opportunities of getting that APR filed. Some banks are accepting Indian CA signed APR financials. Some banks are not. So accordingly, just check it up with your banker and accordingly get the work done. In case of investment by more than one PRRI to be filed by the AE, no reporting where holding is 10% without control or where foreign entity is under liquidation. Annual return on by FLA, which is ODI in one form FLA. So form FLA is through the reporting portal through various, it's a different branch and not a foreign exchange thing. You need to report, but many people skip reporting form FLA. What is the obligation of investor? A lot of obligation. This is where people falters and again bring us the professional opportunities. This is towards the last leg of our overseas investment. And at, let's say, half an hour we've spent over there, and then half an hour we spent over the foreign investment. I think we may be able to finish this much earlier than, let's say, 15, 20 minutes, because the queries are in this way. The queries will not be there. I normally keep 15, 20 minutes for queries. So what do investor have to do? Investor have to evidence submit of any investment to AD Bank within 6 months. Otherwise, the form remitted shall be repatriated. Form FC shall be submitted to the AD Bank for obtaining UIN or honor before making initial ODI. Okay, so they will be submitted to AD Bank for obtaining UIN. Any remittance towards a foreign entity shall be facilitated by the AD Bank only after obtaining the necessary UIN. So any remittance, they will be only after obtaining the necessary UIN. Without UIN, you will not be able to face, and let's say sometimes people, 2, 3 people invest. So somebody who does a higher stake would actually generate the UIN. The Indian investor shall obtain UIN from RBI before sending any outward remittance or acquisition for them. They should also designate one AD banker, and any repatriation of any dues or receivable from the foreign entity should be repatriated in 90 days. So these are the various obligation and which people sometimes uh, tend to miss out. I would urge all of you to check with respect to your clientele that are there any such obligation which the current people are not fulfilling, and it would generate a good professional opportunity for you. So till now, just to sum up and give a maybe a 1 minute break to all of you. In summary, what we have done is why FEMA is required, what is NRI, what is OCI, what is person resident outside India, what is a capital account transaction, what is a current account transaction. A capital account transaction is prohibited until unless allowed. A current account transaction is allowed until unless prohibited. Capital account transaction is something which alters the asset and liability and contingent liability outside India of person resident in India, and alters the Indian asset and liability of a person resident outside India. Apart from everything else is current account transactions. Okay. Then we learned about ODI, OI. OI is it divided into two parts, ODI or OI majorly. Then you have loans and everything else. Your ODI is actually more direct investment, more investment sometimes more than 10% or having a control. You need to have more formalities. You need to give a lot many information. Your OPI is little less restrictive because it's a very small portion. It's more of an investment in a portfolio for investing and not for running the show, and therefore you have lesser guardrails for it, lesser reporting for it, and that needs to be filled up. Okay, those forms needs to be filled up, but they are less rigorous. It creates a good professional opportunities because at foreign location many times they just incorporate the companies like this, and at Indian, it takes months and months to get those issues, correct. So anybody who's opening a country company outside, tell them to do these activities correctly. Otherwise, they would be in a soup. So we are sharp at 3 p.m. We'll take a minute of break just to give you maybe a breather. And then after a minute, and I'll have a water. And then after a minute, we will start with the foreign investment. There's something coming inside India. What are the opportunities? What are the forms to be filed where we can work out? So that is what we will do. Just give me a minute. Okay. So let's go ahead. I think we should be done good for next 40 minutes or so. We will focus on foreign investment coming in India, and then various discussions we can do. No, so any foreign individual or foreign entity invest in India on a repatriable basis, that's a Indian into Indian entity, that is a foreign direct investment. Uh, on what is a repatriable basis, on a non-repatriable basis, we will discuss. But typically, that's a foreign investment. Okay, somebody who has come in India and they want to invest in India. Again, there are two important parts of it. Okay, and we need to discuss that. Just a second. And we need to understand that foreign direct investment is again more permanent in nature and therefore more rigorous filing requirements would be there. Okay, so more form filing, more information would be required. That what a foreign direct investment does. So investment through equity investment by a person resident outside India in an unlisted Indian company, or investment in 10% or more of the post issue paid up equity capital on a fully diluted basis of a listed India company. So again, the similar criteria is there. In an unlisted company, whatever amount comes in, that is a foreign direct investment. Or in the listed company, even the 10%. So earlier there was a confusion, both in ODI, FDI, now it is clear 10% is the threshold. In case in existing investment by a person resident outside India in equity instrument of a listed equity entity falls to a level below 10% of the post-issue paid-up equity capital on a fully diluted basis, the investment shall continue to be. If it falls below, it will still be considered as a FDI. What is the FPI? Less than 10%, or or listed investor company, or any equity instrument. So FI, if you see FI is a restaurant menu. It has various options, FDI and FPI. FDI is ordering a full meal and getting a seat at the table. Significant stake and potential. FPI is like grabbing a snack from counter, buying, not require anything else. So what are the prohibited sector? FDI is prohibited into these various 9 sectors. Lottery business, including government, private lottery, online lottery, gambling and betting, including casinos, chit funds, Nidhi company, trading in TDR, so trading in transferable development rights, real estate business or construction of farmhouses. So any real estate business, again, real estate business should not include development of township, construction of residential or commercial premises, roads or bridges, and real estate and everything. Manufacturing of cigars, cheroots, cigar, all these, and activities which are not open for private sector investment, like atomic, railway operations, and foreign technology collaboration. So people will do, okay, we'll go to collaboration and for lottery business, gambling and everything. So therefore, any kind of foreign technology collaboration also for this lottery and gambling activities is prohibited. So these activities you cannot invest. Otherwise, you need to check sometimes sector specific activities and need to check it. Where do we have to report? So remember, all the ODI filings, all the OI filings are physical through AD bankers. You file the form, they will come back to you sometimes in days, weeks, months, and the tug of war will be keep going on before you generate UIN. It takes a bit of time. Thankfully, the SMF portal online, the FDI is much more smoother. And we have seen better responses, better conversion rates into SMF because bank also need to file the form. They have a TAT. So single master form SMF, the forms portal where all the filing related to FDI is done through RBI. All the filing. The SMF portal has all forms which are filed in case of FDI for FCGPR, FCTRS, etc. The first and foremost step is to get registered on SMF portal. सबसे important क्या है? एक SMF portal पे registration link we have given. Okay. Now, important thing is to get it registered, and it's a good platform where it has improved bit by bit. Earlier there was the eBiz platform, then there's an SMF platform. It takes someone 10 to 12 to complete. You first need to do entity user registration. So, what is the entity user? Who is a person authorized by the entity that he will operate such activity. Then you need to do an entity master form. Is then diligence check whether there's whether it's about the entity only, and then the business user, the applicant reporting for the transaction at firms. A BU can use his user login only for the entity which is authorized. If the person wants to act as a business user for other entity, he must register himself separately. So a business user is actually connected to an entity. Entity is actually a pre-check over there, and it takes around 10 to 12 days. And because all reporting needs to be done in within 30 days, most of the reporting would require to be 30 days. Therefore, we request anyone who is entering such into transaction and believe that such transaction would happen, better to open an SMF portal before. Because SMF portal, you may not go into transaction, but if you go, then and it delays the opening, your late service fee and all will start. Okay. So now comes what are the professional opportunities. Various form needs to be filed. We have mentioned few of them. I think SMF portal allows are in some 9 forms. We have mentioned I think around 5 of them, which are a regular one. So what it is there? Form FCTRS is there. Reporting of transfer, any kind of transfer of share of the Indian company from R to NR or NR to R, they need to file within 60 days of transfer. Form ESOP, any issue of ESOP and everything needs to be filed. FDI LLP, I think FCGPR, we have missed one slide is by mistake, some mixed. Form FCGPR is there when there is any issue of shares. That is also there within 30 days. And in LLP, your form FDI, FDI LLP, DI, all these forms are to be filed. Then you have acquisition of immovable property by NRI or an OCI. What is an acquisition? They can be done by an individual capacity, by a joint acquisition. So many people come to you and say, we want to buy a land, we want to buy a property, we want to this. This is also somewhere you can help them, like what they can buy, what they cannot buy, in what ways they can buy, what they can buy, what they can buy. Okay, so they can buy an individual capacity, they can do a joint acquisition. Who can acquire this property in India? NRI or non-resident India means an individual resident outside India who is a citizen of India. OCA already says only these people can buy. Okay, can buy. So acquisition can be done. Just a second. NRI or OCI may acquire. Apart from those people, it's not allowed to buy property. Remember that. Many questions come, can I, and as a foreign resident, can I buy the property? No. And NRI or OCI, again, it's a capital account transaction. It alters the asset and liability of a company, a person resident outside India, and asset and liabilities in India. NRI and OCI may acquire immovable property, but the consideration for transfer shall be made out of either fund received through banking channels or fund held in any non-resident account. No payment for any transfer of immovable property shall be made either by traveler's check or by a foreign currency note. Remember, and most preferably remember, NRI OCI cannot acquire agricultural land, farmhouse, or plantation property. They cannot acquire that. As simple as that. Not by those, any kind of gift, not by any other things, cannot acquire that, you know. Again, gift, NRI OCI may acquire immovable property other than agricultural land or farmhouse by way of gift from a person resident or NRI OCI may acquire immovable property by way of inheritance. Over here, agricultural land and plantation property and farmhouses are allowed. But again, NRI OCA may transfer immovable property to a person only resident in India, but they cannot now transfer this to other than agricultural land or farmhouse or plantation property to any other NRI OCI. So it's a very, very common transaction when NRI OCI earn a lot of amount of money outside India. They want to come home, buy a property. They want to, invest in growing India. And you can tell them no simply to the agricultural land or farmhouse, or they will have to wait for the inheritance to come to them. In any case of, any kind of, buying. So what questions to be asked when a non-resident individual buy owns? Is he a NRI or OCA card holder? No, not going to buy. Is a citizen of 11 prohibited country? Yes, not eligible. Whether he wants to buy an agricultural land, plantation or farmhouse? If yes, not eligible. So very clearly, a lot of people have done through some other Benami names, other things, whatever. I'm not talking about those means, but they cannot just buy, the certain given ways. Real estate property, defining real estate, as I said, it excludes township development, construction project, REITs is allowed, rental income, it's okay. Rental income, earning rent from leasing property without transferring ownership is not considered as real estate business. And then transfer of, any transaction including a transfer of immovable property right, including sale, exchange, or reclamation is part of real estate business. So the real estate business is prohibited. However, some things are allowed. We have already discussed this. This already we have discussed. So any RI, any RI, NRI or OCI by way of purchase is allowed. So this you can maybe. Now, what is the concept of LSF? RBI says that, um, okay, it's a policy law. Policies may not be clear to general public. You're bound to make mistake. It's not something will put you into the bars for doing such a mistake. Okay.
Right.
And when we cannot put you in the bar, but because you've done a mistake, please, for a certain point of time, certain offenses, which could be considered okay, genuinely mistake done, please pay a late service fee. Hmm? Even it's not an offense, you pay a late service fee and you get free.
इनका जीएसटी मैच हुआ था हमारे चीज.
So, so a person resident in India who is
इनपुट क्रेडिट है
delayed
कैरी
in
फॉरवर्ड की हुई.
there is some voice.
मतलब
uh,
है पेबल था क्या था.
I think,
कैसे किया था पे.
ma'am, just a second.
चालान है.
If you can mute, ma'am.
हाँ. इनकी 16,42,000 की जीएसटी क्या पड़ी है. इनपुट.
Uh, Technical team, if you can mute Amita, ma'am.
60,000 का टीडीएस और ये भी 60,000 का इनका रिसीवेबल होगा. काटते थे किसी का है ही नहीं.
Technical team, if you can mute Amita, ma'am, that would be helpful. And Amita, ma'am, if you know her voice is coming, so if you can mute. Done, thanks. So what if is there is a delay in reporting of any provision? Sometimes a lot many people come to you, "Hey, this has gone messy now. What do we do? How do we protect ourselves? Will there be a lot many issues?" You said, okay, let's see whether there is an LSF, whether this can go through an LSF. A person resident in India would delayed in submitting the requisite form or return a document. Such person may file, submit the requisite form, return documents, etc., and pay the LSF through designated AD bank as per Regulation 11 of OA regulation. So, person resident in India who has a delayed anything, most of the things are there. Simply, you go and the formula is given, So, they've given this LSF is 7,500 multi plus 0.025 percentage into the amount involved multiplied by into n. Maximum amount will be limited to 100% of amount and not an upwards of nearest 100. So that is what something which needs to be seen. Then there is a compounding contraventions also. Okay, this slide is over here, FCGPR and FLA, it's fine. Compounding contravention. Okay, so the compounding can be there, sometimes it is more higher than the LSF. The LSF is not applicable. The compounding provisions are there. Okay, you say, okay, we plead compounding. We have done something wrong. Okay, and because we have done something wrong, we are actually, pleading that this has been done wrong, and please do, uh, condone the mistake. And you go to RBI, the RBI have a meeting, they generally call for date, and then accordingly, they issue a compounding order, and your issue gets resolved. One important part, which may was there should be in front, but NRE, FCNR, and NR account, but I think this is very easily available in public domain. It is there. Some of the FAQs: can a person resident in India borrowed fund from outside India? Okay. So, can a person resident in India borrowed from outside India? Some questions. And then we'll maybe next 10-15 minutes we'll speak some certain general things about over here. This is the last slide practically. As I said, normally 30 minutes, 20 minutes I keep for public discussion. Can a person resident in India borrowed from some outside India? So yes, a person may borrow from NRI relatives who are OCI cardholders subject to such terms and conditions as specified by RBI. Then can a person resident in India lend fund outside India? Yes, they can go within the overall limit subject to LRS. Borrowed funds are not used, should not be used for restricted end uses. Can an Indian company grant loan in foreign currency? may grant to the branches, say for personal purpose, loan rules and others, that is there. Now, next 10-15 minutes, some important consideration which may not be part of this uh, presentation per se. So, very important thing to note over here is that a lot of FEMA provisions are attracted where there is a export import transaction. So you're selling something or you're buying something. In both the cases, let's say if you're the auditor, and those are the first steps where you try to go into the do some kind of FEMA consulting, some kind of FEMA audits, and ask your client, okay, if you have done a sale, we will check your EDPMS, export data, processing, and we will check whether all the amount you have received, whether that has been squared off or not, all the amount which you have, received, whether they have been actually, portrayed correctly by the, I would say correctly by the banker or not. Similarly with IDPMS. So as an auditor, I would say every year you should obtain EDPMS and IDPMS data from the banker, get it verified with your debtors and creditors account, and then give a report. This is a very good value addition during audit, and people may hire you this for your uh, as a professional opportunity. Your work may get increased. People may hire you for this as well. Next up is whenever there is an any loan transaction, a lot many people, due to cheap availability of funds outside, are borrowing. Remember, for all those capital account transaction where you're borrowing or you're getting the investment, you get a 30 days time to file the form. Over here, you get you get no time. You need to first obtain a loan registration number and then work ahead. So the important thing is to get a loan registration number upfront and tell your client that such loan registration number would require to be obtained while getting the ECB funds. So this is again an area where you would require to be mindful of the fact. Again, one more thing. You may file something in capital account transaction or current account transaction not permitted. FEMA is a policy law, and in policy there could be exceptions. You could reach to RBI to each and anything and ask whether this is a genuine case, can I get this done or not? But to check the track record, ask the experts whether such things have been allowed in past or not. Otherwise, you'll be wasting your time because most of the people will follow a precedence and may take call accordingly. So remember, Emma, is a policy law. It's not like that you cannot go to income tax and say, sir, there are some practical issues. Sorry, can we settle? Can we, instead of 22%, can I give a 17% tax? No. But in FEMA, you could go ask, show your genuinity, ask for approvals whenever it is not allowed, file an approval for it through the AD banker, and the bank may or may not accept it. So do check the acceptance in previous years while actually, going for such procedures. So remember, FEMA is a procedural law, it's a policy law, and therefore an exception of a policy can be made if your case is genuine. Most of the compounding cases and those cases, the FEMA side, the people RBI are really helpful. They will help you out. That is the provisions, and please get them. So do not consider this as an income tax or something like that, where they will be behind you. But as simple as that they would require some, they do genuinely help out. They genuinely help out to all of us, whenever the issues is there. However, at the GM level, at bank level, there is a lot many issues, and in FEMA, you need to actually know who in the bank will solve your issues. At local representation level, at branch level, people are not aware. They are just picking up your document and send it across to their main head office. So you need to ask the contact number of the main head office and get things done. Otherwise, this will always create an issue, and you will be in the perennial tug of war between the bankers and the client, what needs to be done. So this is something which is to be looked after. This is something which needs to be taken care. Uh, what else? It's an interesting law. It's a, I would not say a new one, but there are not many practitioners of it. So I would urge all of you to be part of it and create a lot professional opportunities. We do have a small WhatsApp group where people can join in. We do share updates via FEMA ke Fund Day, our weekly. In the last 3.5 years, we have been weekly issuing this newsletter, so you can follow that also. And I would believe, I kept a little bit time for question and answers. I'm not sure whether this format allows. If there are any, would
Yes,
be happy to take them. Okay, and that is
we have
why
a
I
question answer
we have a question
session.
answer. Very good, ma'am. Very good.
Yeah, so
So
I request the participants to write their questions so that we can take it up. A few questions are
absolutely,
coming up, so we'll wait for a few questions. Let me
absolutely, ma'am.
read out some
Absolutely.
questions.
Yeah. We will take questions whatever they come, and we will explain the rationale behind it. That would be helpful. And let's see if uh, you know.
Okay. So CA Madheshwaran K has asked, is it
Oh,
related to
I'm not.
capping?
I'm unable to see it. Is there any
No,
possibility I can
Q
see?
and is with me, sir. I'll
Acha,
read
it's
out
only
the
with you.
questions.
Okay, not an issue. You can please tell.
He has just mentioned capital, so I'm not able to find out what exactly it's about. The question is
Okay.
share word capital has been in question, might be. Then Parth Thakkar has asked to explain, give clarity regarding contingent liability.
Okay, so there
What?
was a question of a contingent liability which I had asked. Then contingent liability with respect to guarantee, I had given that question that let's say a person resident in India gives a guarantee for a person resident outside India, whether that will be a capital account transaction or a current account transaction. Okay, so what happens is because, and I'll go to that slide just so that everybody can see it. A capital account transactions are the transactions which alters the asset or liability, including contingent liability, okay, outside India of a person resident in India. So, an Indian person, PRI, he has created a contingent liability. The liability is not there; it's a contingent. He has given a guarantee, and his guarantee could be invoked at any point of time. So, because he or she has created a contingent liability, this will be a capital account transaction. Okay. The same word contingent liability is not present where when an when a person resident outside creates asset or liability in India. It's only asset and liability, and therefore, in such a scenario, it will not be a capital account transaction. When a person resident outside India creates a contingent liability, creates a guarantee for an Indian person, it will be a current account transaction, and therefore it will be freely allowed unless prohibited. So that was my analysis of it part. Hope it is clear. Yes, ma'am. Further
Yeah, the
question.
next question is from Vishnu Naveen. Hi, is FTRS required to be filed if there is a share transfer of an Indian company between NR to NR?
No. So NR to NR, FCTRS will not be required. Only from R to NR or to NR to R, FCTRS would be required. When there is a transaction between NR to NR, the foreign shareholding does not changes, and therefore there is no requirement of filing any kind of FCTRS. Ma'am, you're on mute. Amita, ma'am, you're on mute.
Yeah, there are no further questions. Some generic
Okay.
question about a structured CPR. It's not structured, it's unstructured one.
Okay.
And right now we are getting only this much of questions.
Okay.
So
We'll
in
wait
case
for a
further
couple
would
of
be
minutes,
there,
maybe people. Yeah, we can wait for a couple
yeah.
of minutes then. Happy to take the questions.
Yeah, we'll wait. I think these are the number of questions till now. I'll refresh it. There is a question from CA Madheshwaran K. I have a question. My client who recently shifted to Australia for employment sold her property in Bangalore. She transferred the proceeds to Australia and purchased the property there. What will be the FEMA consequences?
So that person is shifted to Australia and the person has shifted for good. Basically they have shifted, they have, they are now left India for employment or for any business vocational purposes. They would become NRI the moment they are shifted. And once they have sold the property, they have bought the other property over there, they become an NRI. No reporting, nothing to be done because they are outside the ambit of Indian foreign because they have become a non-resident, the property is outside India. So no, nothing to be filed or nothing to be told to them. They can do as per their own the Australian laws. Nothing from Indian side they need to check. Only thing is because they become a non-resident, they need to inform to, let's say, the mutual fund they used to hold, the equity accounts, the demat accounts, the bank accounts they used to have. So they want to convert, they have to convert it to NRO NRE account, and those accounts they cannot carry on with the same residential status which they previously held to.
Okay. So one question there, this is OCI impact something in case of buying of property by NRI? OCI
So,
holders have any
so
edge over others?
So yes, so OCI and NRI would have an edge over non-residents, other non-residents who are not a citizen of India or non a non-resident. So most of the places NRI and OCI are equally placed. Some of the places OCI would be under NRI as a category, but NRI is a broad category. NRI is a bigger category because they are still citizen of India. OCI have left citizenship and actually got other country citizenship and they are overseas citizen of India. So, in terms of preference, first will always be the non-resident, okay, Indians, NRIs who are the citizen of India, then a OCI, overseas citizen of India, and then comes to other non-resident who are neither these two categories. Okay, so they would let's say NR cannot buy a property in India, they cannot buy, but a NRI or a OCI can buy property in India. That's not an issue.
So these are the set of questions only right now we have. So
Okay.
we can conclude the session if you permit.
Sure, you can maybe wait for a minute also, one more minute, and maybe if somebody's typing or something like that, and then otherwise we'll conclude. Maybe.
Okay, sure.
I think we'll conclude if no further questions.
Yeah, no further questions are coming as such.
Sure.
So I would like to thank you, sir, on behalf of the Committee on Commercial Laws, Economic Advisory, and NPO Committee of ICI. Heartfelt thank to our distinguished speaker, Naman sir, for sharing such deep expertise and practical perspective. Your session was very informative and it was landscape of cross-border opportunities for chartered accountants, and we are highly benefited by this session. Thank you very much for your time, sir.
Thank you, ma'am. It's an honor and privilege to speak at ICI Forum, and thank you, committee, once again for having me here. Thank you.
Thank you.
Yes,